Well, greetings everybody. So we are continuing our countdown, the final 4 free recommendations before the opening of the course. So today we ran the 11 baskets that are the components of the sector ETFs, and that's a lot of products and all of those things. So we ran it with a 0.8 correlation and a 0.8 RW coefficient out of the bag, and then we added a couple of others. We put the minimum number of winners for our quick and dirty back test to 4 and 5% up and down for the expectation value. And when we did that, we had, what is that? Oh, I don't know, about 20 or so products to choose from, or pairs to choose from. But the one we're going to end up with today is in a basket that we don't use that often. It's the XLP basket, Consumer Staples. And it is CVS versus WBA, and you would expect, of course, CVS versus Walgreens, two major pharmacy companies, to have a very strong RW coefficient, and that is exactly what we find. The correlation is only 0.82, but the RW coefficient being 0.8 from that is very strong. So let's go take a look at it in the analysis page. So the picture is good, right? The picture is nice. As we mentioned already, the RW coefficient is the spectacular part of this trade. It's been outside the second standard deviation 5 times, returned profitably to the mean 4, and it is currently outside the second standard deviation right now. And that, of course, is what we're trying to trade. So, a perfect track record. I've already added it to the observe page. This is our watch list, right, that we use for watching for things that we are going to trade. Good looking picture. It's still trending up a little bit. Of course, we would like to watch and see to make sure there's a motion down before we get into it. So don't necessarily jump into it this moment, but we are putting it on the watch list now. Let's go take a look at it in the hitting probabilities. A decent mean reversion here, right? A very clear downward slope. Let's make the Monte Carlo simulation run with 10,000 paths. And when we do that, we get good numbers. These aren't crazy good numbers, but they're good numbers. The most recent value being 5.7, and it's a short, so we would like to know how often we're going to be below that number. And this is saying in 30 days we'll be below that almost 91% of the time. So, again, those of you who watch these recommendations know that that's a good number, but not some crazy kind of good number. And the expectation value here is showing in 30 days about 10%, right? About 10% down. That's also quite nice. So getting all the way back to the mean, minus 3.86, half the time in 41 bars or less. The mode being 23 bars. We might tighten that up a little bit as far as the target price. But in any case, all these are very good numbers. Let's go take a quick review over here, and we see a good picture. We see an okay correlation. We see an awesome RW coefficient. We see a perfect track record. And we see that it's outside the second standard deviation right now where we could make some money. So this is going to be our recommendation. CVS minus 1.02 of WBA. It is a short, so for every share of CVS that you sell, you're going to buy 1.02 shares of WBA. Good luck with your trading.